Now that you've learned about some popular methods and reasons to pursue a refinance, let's talk about how to actually do it. Step 1, figure out why you want to refinance and crunch the numbers to see if it makes sense for you. Let's welcome Sanchez to help us learn more.
So happy to be here. I love what you said at the start about determining your why. There are plenty of good reasons to refi, but what is your personal motivation? There are 4 steps you can take to help you decide. First, set a clear financial goal. Do you want to reduce your monthly payment, shorten your loan term, tap into your home equity? Think about your primary motivator and which refi method will help you reach your goal. Second, check your credit score and history. The higher your credit score, the better your chance of being approved for a mortgage and the better offer you're likely to receive. Review your credit report and make sure there are no errors that could affect your ability to get approved. Third, determine how much home equity you have. Borrowers with over 20% equity in their home will typically get the best rates and fewer fees from lenders. To calculate your home equity, subtract your current mortgage balance and any other loans and liens against your home from your home's current estimated value. For example, if your home is worth $325,000, but you still owe $250,000, your home equity is $75,000. Finally, shop around. One of the biggest mistakes homeowners make when it comes to refinancing is not shopping around for a lender. According to the Consumer Financial Protection Bureau, comparison shopping can save you an average of $9,000 over the life of a 30-year mortgage. You don't want to skip this step. In fact, you can do it right on Bankrate.com. Visit our mortgage marketplace to compare top lenders and get a free quote today. After you've shopped around and settled on a lender, it's important to prepare the paperwork. I cannot stress this enough, but let me give you a cheat code. Set yourself up for success by organizing your documents and personal information ahead of time. I promise you this cheat code will save you from scrambling down the road. The first thing you should do is collect and analyze your finances. In addition to reviewing your credit report, it's a good idea to gather recent pay stubs, federal tax returns, bank statements, and other financial paperwork that your lender will need during the underwriting process. The following documents are typically required in order to finalize your refinance application. Proof of income, such as recent pay stubs, tax returns from the last 2 years, and tax forms including 1099s and W-2s. Credit information, including your credit score and 3 credit reports. Your bank or credit card may be able to provide you with your credit score information free of charge, or you can visit annualcreditreport.com for a free credit report. Proof of assets, including 2 consecutive recent statements from savings, checking, investment, and/or retirement accounts, as well as an updated balance sheet of your combined assets or a cash flow summary. Statements of debt, including documents that reflect the money you owe for your current mortgage, credit cards, student loans, auto loans, and/or home equity loans. Proof of insurance, including homeowners insurance and title insurance. After you've collected your documents, it's time to prepare for the appraisal. In most cases, your lender will require a mortgage refinance appraisal to determine your home's current market value. The appraisal itself costs a few $100s, but could raise the documented value of your home if you've made recent improvements or repairs, or if the value of your home has increased. Also, be prepared to bring cash to closing if needed. The closing disclosure and loan estimate document will tell you how much money you need to pay out of pocket to close the mortgage. Some lenders offer a no closing costs option, which means that the fees are rolled into your new loan amount. You won't have to pay closing costs up front, but you will have a higher loan amount and/or a higher interest rate. If you plan to stay in your home for longer than 5 years, this option might not be the best because you'll be paying a higher interest rate for an extended period of time. Now, to determine if a no closing costs refinance is right for you, Make sure your total payments of principal and interest are less than what they would be if you paid closing costs up front.
One more thing to note. Keep tabs on your loan after closing. Down the road, it's possible that your lender might resell your loan to another lender. This won't impact the terms of your mortgage, but it will change where you send your monthly payments. This can happen immediately after closing or even years later, so keep an eye out for mail notifying you of any such changes. Now, let's head back to Sanchez for some intel on finding the best refinance lender and costs you should anticipate.
I'm going to clue you in on our not-so-secret secret. The trick to finding the best refinance rate is to shop around. We recommend getting quotes from at least 3 lenders, including a mortgage broker, a bank, and an online lender. You can talk with each lender to determine your refinance goal and the type of loan you want, which will help you find the best rates in your price range. Closing costs for refinancing your mortgage vary depending upon where you live, but you can typically expect them to add up to a few $1,000s or between 2 and 6% of your loan amount. With a mortgage refinance, you can typically expect to pay the following fees. We have the application fee. It's going to cost you about $75 to $300 or more. The origination and underwriting fee is going to be 0.5% to 1.5% of the principal loan amount. We have the recording fee, which is going to depend on the location of your home. You have the appraisal, which is going to be about $300 to $400 or more. We have the credit check, which is going to be $25 or more. Title service fees is going to be $700 to $900. We have the survey fee, which is going to be $150 to $400. And lastly, we have the attorney and closing fees, which is going to be roughly $500 to $1,000.
In addition to the cost of refinancing, another common question is about how long it takes. The time it takes to refinance depends heavily on your lender, with digital lenders typically having the fastest closing times. Usually, you can expect refinancing to take anywhere from 15 to 45 days to complete. Keep watching for our next lesson, where we'll cover what you should do if you want to refinance but don't have great credit.